Hello and welcome to Gray Decision Intelligence, Demand Trends Monthly Webinar Series. Just give me a moment. I want to double check that we have our recording going. Okay, let's get started. Think of this as your monthly checkup for achieving gains in higher education. My Gray DI panelists and I are your financial coaches for this session, ready to answer any questions you have about building a strong academic portfolio. Today's workout, academic program evaluation and growth, will equip you with the latest market insights and trends to pump up your enrollment and optimize your program portfolio for maximum ROI. Before we get started, a few quick warm-up exercises. If you have questions, please use the Q&A section or the chat. We'll tackle as many as we can live and follow up with a personalized consultation by request. Comments and discussion, the chat area is your space to connect with fellow participants and share your own strategies for fiscal fitness. And if you want to review today's training plan, well, we'll send you a link to the slides and the video recording after the session so you can revisit the key takeaways and stay on track. Now let's get those financial muscles flexing. I'll hand things off to Bob Atkins, the founder of Gray Decision Intelligence and our best-selling author of Start, Stop, or Grow, a data-informed approach to academic program evaluation and management. He's your expert trainer for building a financially thriving institution. Thank you, Bob.
Welcome, everybody, and thank you very much, Marianne, for the wonderful introduction. You hear the theme of fiscal fitness, and I want to make sure that you understand how we think about this, because it could sound almost offensive in higher ed. And I think the way some people approach this, it is both a little offensive and actually bad for you. So if you think about fitness, fitness is not about being skinny. It is not about starving yourself. You cannot become fit by starving yourself. You can become thinner. You can even die if you do it long enough. But fitness is a different concept. And so what we're trying to do is figure out how to help institutions, many of whom are struggling financially, to achieve this concept of fiscal fitness, where we combine building strength and reducing overall body mass, getting a little leaner. But leanness is not an end in itself. Leanness, again, doesn't make you fit, may not even make you healthy. So that same is true for the financials of a higher ed institution. And I want to make sure we also understand our purpose in becoming more fit. And that is to enable you to better deliver on your mission. This is not an end in itself. And by the way, when it comes to being physically fit, I'm probably a monstrous example of failure. So I recognize that. And if anybody's looking to see if I'm doing what I say, the answer is not really. So this is hard, and it takes time, and it takes a commitment to doing the things that will make you stronger in the long term, not just to lower your cost, but to actually make your financials more sustainable. All right, so in that, we really hit a couple of things. On the one side, program evaluation. I mean, in particular, this market data we'll spend a good deal of time on today is really oriented towards growth. And my analogy would be that's akin to building strength, to lifting weights and having your arms get stronger so you can do more things. And I think that side of the equation is very, very important. I'm not aware of anybody who's been able to cut their way out of financial problems without finding growth. It doesn't really work in higher ed, or frankly in ed in general. It's very difficult. So we'll talk about a program evaluation system, and I'll give you ideas about how that can help you grow. Then we'll look at student demand, employment, and we'll drill down on this fiscal fitness concept a little bit and give you a couple of thoughts for how that works. And finally, I'll summarize. So first things first, an academic program evaluation and fiscal fitness really starts with your mission and doing the things that you need to do in order to achieve that mission in a more robust way in the future, at a minimum, to be able to achieve it on a sustainable basis. So program evaluation is fundamentally there to help you achieve your mission. It does require you to understand the academic performance of your programs. That's a part of it. You need to understand the markets for your programs, and I'll come back to the ingredients there. And last but not least, as we'll talk about, you need to understand the margins on your programs because margin funds mission. On markets, there are several key components. One is student demand, and that's why we cover in this presentation what's going on with Google search volumes, enrollment, completions, and other indicators of student demand. It also incorporates employment, and today we'll look at what the employment trends are, total job postings, what job postings are increasing, and what skills are in demand. So that markets piece is where we'll focus most of our attention today. We'll also give you some insight on margins and how they work in higher ed. Now, for all this, in order to make it work, you have to engage the right people with the right information in a good evaluative process so that they can reach sound decisions. We haven't come up with an algorithm that'll make decisions for you, decide what programs. I'm sure it can be built. I'm equally sure that if it were built, nobody would pay attention to it because people really do feel that their judgment is required here. And I would say, in our experience, it really is. And perhaps AI will make us all out of date, but it's not there yet. And finally, you actually have to manage your programs on an ongoing basis. And this is an area where Gray is actually developing its product line as we look forward, so that there's a defined process. You're reminded on a timely basis what questions you should be thinking about. You're given the data to answer those questions, and you're given a place where you can put down your thoughts and others can see them, so that you really do manage programs much more frequently than that 3 to 5 year accreditation cycle people may be accustomed to. Market's moving too fast for that. You need to be looking at your programs on a more frequent basis. The other thing is AI is doing some incredible things here. So I think many of you have seen a program report. Typically, when those are done, they take 6 weeks to 6 months to do, depending on who's doing them. This one takes about 60 seconds, and it takes over 50 variables that we have. It puts them together, shoots them over to AI. AI takes a crack through that, it runs it, and gives a text report to you back in, as I say, about a minute. And this actually has richer data in it than most 6-month reports because it's benefiting from all the automation and data we've collected. All the AI is really doing is writing it down in text, which for many people is just much easier to consume than more complex data dashboards, which we also do. So this is the text manifestation of a data dashboard for a program. I have cropped it so it's easier to read, so there are other categories of information a little bit below that. So AI is out there and it will give you better information and it'll give it to you much more quickly. Still won't answer the fundamental question that you need to grapple with is this program right for you? And that's where your judgment and knowledge of your institution and your markets becomes critical. So what's going on out there in those markets? Let's start with Google keywords. And here, first, how to read the chart. The gray bars are 2022, the black bars are 2023, and that light blue bar is 2024. And many of you are ahead of me, and you can see that 2024 is up. In fact, it's up 23% in December, and overall for the year, we're up 31%. So many of you have probably heard of or seen the articles that have been coming out recently about enrollment. A few months ago, enrollment was down, but it turned out there was an error over at the National Student Clearinghouse, and not in their underlying data, but in the way it was interpreted. And actually, enrollment's going up. And that's very consistent with what we're seeing in Google search volumes. They've been going up for some time now. So demographic cliff or no demographic cliff, looks to me like interest in higher ed and enrollment are at worst flat and probably increasing and going to increase at least for the near-term future. Cost per click at Google really is flat, maybe down 1%. It's all the way up to almost $15 a click at this point. Is it $15 a click at this point? So it is not cheap. Remember, that is the cost to get one potential student to click on your ad on the internet. And that you've got to get at least 100 of those to get one student. So that means that per student, if it were 100, you'd be paying $1,500 a student for that click for the people who ultimately enroll. So don't be mistaken by the $15 price that's inexpensive. It's an expensive channel, but one that's really important if you want to feature a specific program. and it's up overall 6% for the year. So moving on, as we look at the fastest growing searches, these are the programs associate level and below, where there's the highest, the most rapid growth in volume of searches. So it's not percentage growth here. We're looking at unit growth. And I was struck this time by how substantially health dominated the list. Over the course of the last year, any given month, you saw all kinds of things run through here. It's been a while, but theology was up there in the top 10 for a hot minute. But as you move through an entire year, those individual month-to-month variations flatten out, and you find that healthcare is by far the dominant thing in terms of growth in interest and search volume. We have some 6 of the top 10 for health programs: nursing assistant patient care, medical billing and coding, phlebotomy, ultrasound tech, medical clinical assistant, rad tech, and that rounds out our healthcare. We also have some trades programs, cosmetology, barbering, and HVAC. And then we have one business administration. It doesn't fit in any of those other categories, but is up substantially as well. Now, many of you'll notice that these are relatively low-end jobs in healthcare. There are 2 reasons for that. One, we've sorted on associate and below, so we're picking up a lot of trades programs. That's not quite the right word, certificate and less than degree programs. And so that's one reason. It's just that we've filtered out higher level things to some degree. The second is the lower level you go, the more people there are typically in those professions and going to school as a result. And so small percentage changes lead to large volume changes. So that's, I think, why you're seeing so many of these entry-level kinds of programs growing. Just that it is a law of large numbers to some extent driving that. But also it's interest. And some of these are reasonably well-paid fields, like rad tech and ultrasound tech in particular is a very well-paid field and actually quite a challenging degree to get. So now let's take a look at enrollment. Now we're not talking about interest, we're talking about people who actually came to school. And as I mentioned, this number has been out in the press a lot. We were fortunate the way our numbers get reported to us. We didn't have the problems that were in the NCES releases, so our numbers have been reliable. And that's just because of the way they gave the data to us, so it was clean. And what you can see at the US level, new enrollment, associate and certs, we were up 5% in 2022-23, another 4% in 23-24. We look at bachelor's and master's, and it's basically flat. It's been going up and down about 1% over this time period. Now, this is good news. I will say that one of the confusions in the underlying data sources that, and one of the things that takes a little of the luster off these numbers is that the fastest growing part of this and what's offset declines at other degree levels is dual enrollment with high schools. So much of this growth is actually in students under the age of like 16. And it's not really as beneficial to colleges in most cases as having an actual student on their campus in terms of financials. And on top of that, it actually isn't a student on the campus. So it's not quite what it appears in terms of the growth. So keep that in mind, that dual enrollment is the fastest growing segment in higher ed. Associate certificate, new enrollment volume. So these are all the students who actually enrolled in 23-24 compared to the prior year. Let me just get this right. This isn't compared to, this is the absolute volume, my mistake. And we can see 643,000 students enrolled in general studies. Business was second. Then we followed by registered nursing. Welding is popular. Computer science, psychology, auto mechanics, health services, bookkeeping, and biology. And total new student enrollment was 1.9 million, very healthy number. So that's what people are enrolling in. Keep in mind, we're at the associate level. So many of these students who majored in general studies are going to go on and transfer into 4-year programs. At that point, they may pick a specific major, so they'll ultimately graduate with a degree in a major, not a degree in general studies. So as you see, it's not all uncommon for them to actually some of them to stay in general studies as well. And here we are, new enrollment at the associate level. What was growing, we see this very rapid growth in general studies, although really on a $600,000 base, that's not a huge growth rate, that's 1%. Then we've got a variety of health programs. We've got health services and psychology, several random programs, I like to think of them as business, anthropology, and performing and visual arts. Couldn't come up with a category that would group all those together. And then we have some trades programs. Welding, we've seen a couple of times here, and auto body collision and repair tech, both up over 1,000. And I shouldn't ignore computer science here at the bottom. Yeah, I find it remarkable when you have a program of that size that continues to grow. Business is the same sort of thing. That's the biggest program in the United States, still growing at this degree level. Now let's look at the bachelor's level. And again, we see 267,000. The largest is general studies. Note that that's half the size of the program at the associate's level. So many of those associate students who've moved up into four-year colleges are actually picking majors and show up somewhere else, if you will, on this chart and in other programs that are not here. Business, computer science, registered nursing are the top four. That's a pretty normal set of things. I'm a little surprised to see biology make the list of the top five. And, you know, psychology, again, that's pretty normal. We'll see that very often. Business analytics is a new entry to the list, not new, but in the last year or two, that's really gotten very large and begun to make these lists in terms of new enrollment. Criminal justice has always been popular. Economics and mechanical engineering also evergreen programs. So the really interesting thing here are things like business analytics creeping onto our list. And I think biology, again, is somewhat unusual to see that in the top five. Now, let's take a look at change, so growth rates, if you will, and what has grown. And again, here we're looking at unit growth, not percentage growth. Business analytics at the bachelor's level had the highest unit growth. Interesting to pair that up with the growth in business, because I think many of these students would have been business students until the advent of business analytics. So business has in effect grown despite the cannibalization and growth of business analytics. On the STEM side, we also have cybersecurity and data analytics, another one that's going to peel students out of more traditional subjects like computer science or business. Then we have education, elementary education. We have a couple of health programs. I mentioned registered nursing, also mental health counseling, and social work has been loosely grouped in there. And then we have a couple of business, and it's a little bit surprising to me to see so little business and so far down the list. But we've got business management general and human resource management general, both making our top 10. Now let's take a big turn and look at international. And I'll toot our horn here for a moment. One of our clients used the international demand data that you're about to see in the dashboards that we offer. And they identified specific cities internationally where they wanted to market and what programs within those cities would be attractive. Using that, and by the way, at vastly lower cost. Those leads that cost, you know, the Google clicks that cost $15.50 that we just saw, you go over to Nepal and they cost pennies. So it's a very cost-effective way to go to market outside the US. They grew their enrollment with these strategies from some 300 students in their international students on campus to 1,000 over a course of 2 years. Very material increase in the entire student body at their institution. So when you put this data to use, you can get a lot of value out of it. And you can see that international interest is up. I am sure the election will affect that. I'm not exactly sure how. My impression initially was that we were going to be generally hostile to immigrants. and that would hit this. What I've heard, I don't know which, and I will consciously say, I don't know which of these things is really true, if any of them, but that actually the administration is going to be very open to folks who want to come here and get educated, and be willing to do the education visas, at or above levels that we've seen historically. The proof of the pudding is in the eating, so we'll wait and see what turns out to be true. But it's not quite as clear cut as I thought it was as a negative. I think it might not be. People recognize that we need talent, and we should be getting it wherever we can. Where are people interested? Well, Nepal, interestingly enough, is number one and has been for some time. Now, I should share with you that this list excludes China. The guys we get our data from can't get behind the Great Firewall, and that would be here in the top 10 almost certainly, if it were included. But Nepal has been a surprising entry here in the top 10 for some time. Then we have Bangladesh, Turkey, Pakistan, Brazil, Egypt, Netherlands, Canada, Italy, and the United States. And I look at this list and just say, to me, it's not intuitive. Sure, some of these are just very big countries, Brazil, for example, but Nepal is not. Turkey is a good-sized company, but not one of the in terms of population, but not one of the top 10 in the world. And certainly the Netherlands isn't an enormous country either. So you really do need to look at the data in order to understand where the opportunity may be. Now, what do those students want? So these are the fastest growing programs in terms of page views, the data we get about interest from overseas students. Number one, interestingly, is registered nursing. And then we just have a very eclectic list after that: biomedical engineering, cybersecurity, graphic design, aerospace, psychology, aircraft frame. These are all up over 3,000. And then we have ones just below that: electrical, computer engineering, computer science, and public health general. Fastest growth, and now we're at the graduate level: education general, data analytics or data science, business administration and management. Then we have a big drop off from over 100,000 incremental student page views in each of these. IT at 71, computer science at 71, and then it begins to drop off: marketing management, digital marketing, IT project management, environmental studies, and artificial intelligence. So in terms of popularity, the most rapid growth was at the bachelor's level, is registered nursing. Quite different at the graduate level, where we have 3 programs where interest was up, around 100,000 page views in 3 very different programs aside from nursing. Now let's take a look at non-degree demand. Here we look at Coursera. We also provide data to our clients from Udemy. And why do we do that? Well, it's very difficult to really get good fix on demand for things that are less than a degree. And it's also difficult to find things where folks are really offering a cutting edge, where the courses are being updated very rapidly. That doesn't usually happen in traditional higher education, but Coursera, it does. And so those courses crop up here very quickly. And Coursera is kind enough to share the number of people who've been enrolled in that course since the inception of the course. And so what we do is we keep track of that every month, so we can see how much that enrollment went up from one month to another. And that way we can see very quickly what's hot and what's not in this less than degree space. Probably no surprise, technology tends to be the most of our leaderboard in terms of largest courses. Foundations for data, data everywhere, AI for everyone, foundations of user experience or UX design, technical support fundamentals. All of these enrolled over 250,000 students in 2024. Then we move down a shade, still over 250, learning how to learn, powerful mental tools. And we have introduction to psychology and project initiation, starting a successful project. These are all in that 220, 230 to 260 range. Again, then a drop, and we pick up a few more tech courses, around 200,000 students: introduction to data analytics, crash course in Python, and introduction to artificial intelligence. What I find interesting is If you look back a year, we had a couple of really personal development programs that were making this list, in particular programs about happiness. And those seem to have dropped off. Don't know if that's because everybody's happy now, or that was just a passing fad in terms of a course. But it is a bit of a change in these lists from things that were more about personal development. Now they're very pragmatic technology and business programs that are leading our list. Now let's really shift gears and talk about employment, and we're focused on the US and see what's going on out there. First things first, when you think about employment by program, that's a much tougher thing to analyze than what the government normally does, which is how many people are in occupation. Why is it difficult? Because you have to figure out what occupations, what work is people actually do after they graduate with a degree in a given program. And there's not an obvious link between those two things. So there are folks who sit down and say, well, if you study this, and what we're looking at today is sociology, then you are prepared for or directly prepared for work in these occupations. Now, you might well ask yourself, how do they make the decision of what you're prepared to do? And the answer is a bunch of people in Washington sit around the table and read the description of the program and try and figure out what work people would do with that, people would be trained to do with that degree. You might imagine that that's not a super precise or fact-driven process, and you'd be right. In fact, on the Center for Education Statistics website, what you find is it says, this crosswalk is not based on empirical data. So keep that in mind. And the average salary, by the way, for these 3 jobs that a sociology major could get, child and family social workers, sociology teachers, sociologists, on average, they would make $48,600. So if you believe this, and many do, and you looked at traditional labor market data suppliers, you would think that graduates in sociology had a pretty bleak future. But you might also ask yourself, well, is that factual? What do they really do? And the answer is not that. Only 6% of sociology majors, for example, become child, family, and school social workers. So that's that 6% you see over here. Others do go into social work. We see a lot in psychology, but they go off and do all sorts of other things: criminal justice, family, political science and government, communications, nursing, human services, general education. And notice that we're here at about 70% of all the graduates. So first of all, this is completely wrong. It's only 6% of the total. And it turns out that when you look at a more complete list based on, we actually use 2 sources for this. This is from our alumni database, where we can see what people majored in and what they did after graduation, by institution, by degree. And we find that sociology majors didn't go into 3 occupations. They went into over 700 occupations. That's kind of a big miss when you look at traditional labor data. It's actively misleading. And then you look at the top 10 occupations of alumni with a bachelor in sociology, and we find manager in most of these roles: general manager, managers other, sales managers, project management, advertising and promotions managers, social service managers, marketing managers. We have a couple of others, sales agents and executive and administrative assistants. But these folks don't fail. They go on into management jobs, with some exceptions. I'd say I wouldn't think of it as a victory for a program if their graduates ended up as administrative assistants, where that's a job that you could do without a 4-year college degree. To some extent, it depends how high up, in executive administration you really are as an assistant. But that we would call a degree that does not require a 4-year, an occupation that doesn't require a 4-year degree. And I will acknowledge that that is, a matter of judgment, not empirical data, but I think that's probably true. And we try and distinguish those so that when we have all 777 occupations, we don't kid ourselves that all those outcomes are good. You might see barista a little further down the list here, and we would flag that as a less than degree result. Now let's take a look at U.S. job posting trends. And this has been good news. For those of you who follow the economy, we've been hearing this, that, despite increases in interest rates by the Fed until recently, and then a couple of decreases, the job market remains very strong. It's up 10% year over year in terms of total number of US job postings. I haven't seen anything in our data that would suggest that we're on the brink of a recession. And empirically, if you go back and look at employment data, it is almost as good as it has been in the history of the country. We're down with a 4% unemployment rate. The volume of job postings is extremely healthy. The percentage of people in the US that are in the workforce is, I think, actually at record highs right now. So it's a very robust economy. And you might think that's good news, and in some ways it is. For most folks it is. But we've of course been haunted by inflation. But more importantly, in higher ed, a strong economy and low unemployment is not good for higher ed. When people are unemployed, they tend to go back to school. When they're having difficulty finding jobs, they go back to school to retool and make more money. So generally speaking, our sector is countercyclical, and when the economy is off and unemployment is rising, you'll see an increase in the number of people going to college. Now, I mentioned at the outset the demographic cliff, and I'll give you my summary. I think it's bunk. Not because the number of people born 20 years ago might not decline, but when we've analyzed the relationship between the change in the number of people born and the change in number of people in college, you find very, very little relationship. For the stats people among you, it's an R squared of under 0.2 or 20%. For the rest of you, that means that it is possible that changes in population explain about 20% of the change in enrollment in college 20 years later. So that is not a lot of explanatory power. And I would say that in most of the analyses we've done, it's pretty hard to get it to explain even 10% of the variation. So you really have to torture the data to make population explain change in population, explain change in enrollment. It is also true, if you look back over the last, the 10 years ending in 2019, and we ended in 2019 because obviously after that you get all the impact of COVID messing up enrollment numbers. But when you look at that period, the birth rate 20 years before was going up, and the number of people born was going up, and enrollment was going down. So you would have to believe that an increase in the number of people becoming college age caused a decrease if you believe that those population statistics are a driver of enrollment. So you might well ask, well, if it's not population, what is it? I don't think we're facing a demographic cliff. I believe we're facing a behavioral cliff. The behavior is changing, and fewer people are enrolling in college, or were over that period. I think that's beginning to change just a little bit now, and that's why you see the uptick in enrollment. And there are all sorts of reasons for why that behavior is changing, not the least of which are societal perceptions of college and its value. But also there's more fundamental things. During the period from 2009 to 2019, every year the economy grew and the unemployment went down. By the way, from pretty lousy economy in 2009 and high unemployment rates, but it marched down, and as it marched down, the peaks of enrollment that we saw coming out of the Great Recession began to drop off. And so I would tell you that if you want to know how many people are going to enroll in college, what you really need to focus on is the unemployment rate. And that's not a perfect indicator either, but it gets up to more like 40% as an explanatory variable, 40% R squared. So it's more meaningful. And when we have a final analysis on that, I'll be glad to share it with you on one of these webinars. But in the meantime, just remember, the demographic cliff ain't all it's cracked up to be. The behavioral cliff, on the other hand, is something you should be very concerned about. But fortunately, there's something we can do about that. We can't change the number of people who were born 20 years ago, but we can get out there and get the message out about the value of college and its impact on people's lives, which is almost all positive. Now let's take a look at where those jobs are. And here we're looking at all jobs, and this is going to skew towards, generally towards lower level jobs because there are more of them. So when we think about this, trades are a couple of these: truck drivers, a huge job posting growth, and that's partly because there's huge demand for heavy truck drivers. Someday this will be displaced by automation. I certainly have overestimated how fast that will happen so far. I know the tech is out there, but it's not really being deployed fast enough to offset the demand for truck drivers. Then we have nursing assistants. In healthcare, we have several others: physical therapists, home health and personal care guides, licensed and licensed vocational nurses, licensed practical and vocational nurses. Then it drops off a bit below 100,000. We see auto tech, then industrial engineers, registered nurses, and general and operations managers, rounding out the list of the top 10. So if you're a community college, I would say this is actually a very interesting program. We've done, it's been a couple of years, but we've done some pretty deep analytics on heavy tractor and truck drivers. The economics of that program can be quite attractive. Really, all you need is a parking lot to do most of the program. And you don't need to own the trucks, you can lease them. So the CapEx that scares people off, that I'm gonna have to go out and spend millions of dollars to buy trucks, really don't have to do that. You can lease the trucks and run that. So this is a pretty easy program to get into. Keep in mind, it's not really a Title IV program. You're gonna get most of your payments from programs like workforce education or directly from the student. Now let's look at bachelor's level and above and what skills are people are looking for. And what you're seeing is a heavy emphasis on web development skills. Cubic, I was trying to look at this and see what it is. I believe really Cubic and Bezier are two of the same thing. They're tools for drawing curves and other shapes on a website. So I would combine those if you're thinking about, you know, sort of what our top 10 are and how big they are. WebKit, another web development program. Flexbox, again, web development. So 4 of our top 10 are web development skills. Then you see nursing come in with almost 300,000 requests for those skills. Mental health, 175, rehab, 152, and one more healthcare one, physical therapy at 124,000 requests for those skills. We have 1 or 2 others: construction and point of sale. Now, let's turn to the subject I mentioned at the beginning, physical fitness, and talk about what some of the dynamics are here. What exercises, if you will, might be good for you, and what exercises might not be so great. Let's jump into it. So I mentioned why we care about physical fitness. It's so you can fulfill your mission, survive the crises and stresses that hit higher ed periodically, whether that's a decline in interest in college or COVID. You've got to have some resources to get through those tough times. And of course, you need the resources to actually do what your constituencies want, whether that's students or alumni or local employers. I mentioned that the first thing you need to do to maintain your physical fitness is to increase enrollment. To use the fitness metaphor, you need to build strength. And you can do that through things like new programs, obviously, where we focus. You can add sports teams. You can do more effective marketing or invest more in marketing. There are dozens of ways to grow that we've seen, and I will say I am writing a book on that. Progress is limited, but I am trying, and we'll be able to give you a whole menu of choices of ways to grow. But it is very difficult to have healthy financials in a shrinking institution. Second, you do need to stay fit. This is the diet part of it. You need to identify and reduce excess capacity. Now, you might ask yourself, well, where is that? In small programs, in under-enrolled courses and sections, in faculty workloads? Folks may or may not be working their full load. And we'll talk about each of those. I would also say to maintain physical fitness as well as the integrity of your institution, it's really important to retain students. And it's very expensive to recruit them. And if you lose them, it's very expensive as well. And on top of that, it's very bad for the student themselves to go to a college and end up without a degree. They will have spent the money, incurred the debt, and will not receive the same benefits they would if they graduated. So this is something I think needs to remain in front of us all the time. It is very difficult to fix, but very worthwhile. And of course, one manifestation of that is looking at the courses with high DFW rates. And I'm not telling you to go in and give people easy grading, but really understand what's going on there and figure out how to fix those courses, especially if they're gateway courses that are preventing students to moving on through college, either in the program they've chosen or overall in college. And there are fixes out there. One of them, our clients, not working with us is not something we do particularly, but sat down and looked at the math DFW rates, and math usually has amongst the highest in a college, and said, well, what's wrong here? We don't have to accept this as true. And they went through and actually broke the course and doubled the length. So there's still people who can go through an accelerated course, but for most folks, that minimum level of math skills developed over 2 semesters instead of 1, and their DFW rates dropped by more than 50%. So the students learn the same amount. At the end, they have the competencies they need to move forward in higher education, not to mention having the math skills they'll need in life. But they're allowed a little more time to accomplish that. Now, I mentioned small programs, and this is a huge warning for all of you, and concern for the colleges that I've read about where they've gone in and just cut small programs and cut programs in general. In our judgment and experience, that's very unlikely to have a good outcome. First, when you look at this chart, you can see there are actually very few programs that lose money at a contribution margin level. So I'm not saying they all cover the full cost of the institution, but they do cover the cost of teaching that course and produce some margin. When you blow this out, what you find, first of all, is you can see that about, half or less than half of those very small courses here on the left actually lose money. Well, what's the implication of that? I'm sorry, these are programs, not courses. If you cut based on size, you're as likely to hit one of the dots that's contribution positive as a program or a dot that is contribution negative. So it's not that you can't find programs that lose money to cut, but you can't do it based on program size. You're as likely to pick something that's contribution positive as not. So you have to run the numbers and really understand what the economics are of your program before you make these cuts. The second thing is that there are easier and better ways to do this where you can find much more money with much less risk. And that is really looking down at the course level. When you have a small under-enrolled course that's contribution negative, it is much easier to make that cut and free up some faculty time and resource. The other thing to remember is programs are attached to revenue. That is, if I don't offer this program, some proportion of the students who are in that program might not choose your institution. And so when you cut the program, yeah, you save some money, but you actually lost revenue in many cases, which may offset some or all of the expense you saved. So that's one of the reasons we're very careful and selective when we think about cutting programs, often not worth the trouble. And God forbid you have to teach them out. I don't know how the economics of that can ever be positive. So keep that in mind. Courses are different. Students don't read your catalog and look at individual courses when they make their college decisions. So there is the possibility to cut a course and you're really only affecting their cost structure, or more specifically, your faculty load, without affecting revenue. So in our experience, this is a much safer route. The other thing about it is that there is a lot of opportunity. Almost every college has a number of courses that are running below capacity, and often way below capacity. You're looking at a substantial chunk of courses, think 10, 20% of all courses that are running with 3 to 5 students in them. So there's a lot of opportunity here without damaging the core of your institution or your program of diversity. The other thing, we look at small programs by contrast and say, well, what really happens when you play that out? And so we did that. We have a model of an institution. So we went through and said, well, what happens if we cut a small program? In this case, it happened to be communications at this illustrative university. Not illustrious, illustrative. The data is directionally correct, but not precisely accurate. Well, if we did that, this particular program has 2.9 faculty, 22 students enrolled, and 104,000 in contribution margin. So we retire those 3 faculty and we save $304,000 by the way, before we pay them any sorts of incremental retirement benefits or incentives to retire. And then we find out, well, wait a second here. Almost half the students in the courses that these faculty taught were not in the major. They were students taking a course in communications who were business majors or psychology majors. So we actually still have to teach those students yet in another course. So in effect, we're going to end up taking back $80,000 of this cost we thought we saved, because now we've got to teach those students and add sections someplace else. Then we suffer the enrollment drops, and here we projected out at 3 a year. As the students in the program graduate, we don't replace them on the admission side. We did assume that some of those new enrolls would in fact be enrolled in something else. So we didn't wipe them all out, but gradually they go away. So by the time you get to year 4, you've lost $60,000 a year in declined enrollment, and your income actually at the end of all this fun has gone down. So you didn't actually make yourself healthier or fitter by going on this diet. In the end, you just lost muscle mass, and you're actually in worse shape than you were at the beginning. So there are ways to cut programs. There are programs that are worth cutting, but be super careful. A lot of time the numbers actually don't work. So let me summarize. In 2024, Google searches for academic programs rose 31%. So that is an optimistic indicator for the future. I think we are starting to see a turnaround. It's not huge, but I think we'll see a slight increase in demand, unfortunately, in part because the unemployment rate's going up. So we'll have to keep an eye on that. Highest growth was in healthcare, a little bit of a decline in cost per click, but it remains over $15.50 a click, so it's expensive. So that just means people are marketing heavily for higher ed. 4 programs lead new enrollment growth at both the associate and certificate and the bachelor's level. General studies is by far the largest, and actually the fastest growing as well. Nursing, business, and computer science are in the top 5 at both degree levels. In 2024, international page views also went up, not just Google domestic, and registered nursing was the fastest growing bachelor's program. Education was the fastest growing master's program in terms of international student demand. We have this problem of, what do people do when they graduate? And this premise of direct prep, and much of the, again, traditional data is based on that. The reality is, though, that only 6% of sociology graduates, as an example, go into fields for which they're directly prepared. They really go into some, 774 other occupations, not those 3. And they do pretty well for themselves financially as well. In 2024, job postings grew 10% year over year. There's increasing demand for healthcare workers, trades, software developers, and engineers. And finally, when you focus on program margins, not only costs, and you really think it all the way through, be careful. Cutting small programs may not be quite what it's cracked up to be. And there are other and better ways to get fit besides that. And those are growth, which intrinsically, if you don't add resources, but you increase enrollment, you're going to have a lower cost per student enrolled. So that's akin to being more efficient aerobically. As you trim back classes that are under enrolled, that's more akin to a diet, and you're taking excess weight off that you can lose without reducing the strength of the institution. So that's our fiscal fitness message. The good news is, I think you can be optimistic about what's going to be happening over the next 12 to 18 months in terms of interest in college, as well as job growth. Now, let me open the floor to questions. Please feel free. One of the things we can do, if you'd like, is actually go live and look at an individual program together, and see what a program scorecard looks like. Do we have anybody fired up to do that on the call? I'll set mine up if not.
Ralph, can you take that?
Yes, I can.
Great. It looks like we do have a raised hand here.
Oh, cool.
Mm-hmm.
What can we help you with? What's the question? I don't see it, so I'm going to leave it to you. There we are. Maria.
Yes, can you unmute me?
You are unmuted.
Okay, perfect. My name is Maria Bocalandro. I'm in Dallas College, 120,000 big, system. And yes, we're talking about program reviews. I'm actually on the academic services program, so it's more all the co-curricular. So it has to do with the honor students, service learning, international engagement or education, research, that type of programs. And so I wanted to know if you had any information about academics, co-curricular program evaluation.
I think conceptually, it probably ought to be pretty simpler or similar to the approach that we would take to evaluating a traditional program, and that you'd want to understand whether there are potential students who are interested, who your competition is, what the likely outcomes are for those students, and what your potential revenue and margins are and costs for teaching it. Then it gets a little stickier because I don't think we have very good data for that, where we built data to answer those questions for traditional programs. So we'd have to take a look and say, okay, what is the specific co-curricular thing you're thinking about, and see whether the data sets that we have would fit it, but if not, then you're into primary research to answer those questions.
Thank you.
Great question, by the way. Other questions?
Bob, do you want to just mention our master
Oh,
class?
can you share, please share a slide with comparison web searches and enrollment on the next year following the search? Okay, I think what you're asking for is not trivial to produce. I understand the question. The question is, if we looked at Google search volume or international student volume, how is that predictive of enrollment in the next period? I've tried doing that. It's actually fairly difficult analytically to do. I'll tell you what we found. It's very analogous to the demographic cliff. The volumes of searches, for example, are related to the total volume of students enrolled. So big programs have lots of searches. Unfortunately, that's not very helpful for what you're looking for, which is what's the trend. What we find is the trend is much more difficult to predict, or there's a looser relationship between growth in Google searches, for example, and growth in enrollment. And that's pretty obvious when you think about a growth in Google search of 31%. Enrollment did not go up 31%. So are the two related? Yes, they're related. Are they precisely related? I would say no. That'd be, and so they're indicative, they're directional, but they're not precisely linked. Does that answer your question? Chevenice?
Looks like we're good.
I should say one other thing. They're the best indicators we know of. So when people talk about our data, I'm first to admit it's not perfect, but I hope it's the best available. And so, again, I'd say, is it perfectly predictive? No. But what's our alternative, source of information that would be better? That's really tough to find. I would say the enrollment trends are a decent indicator of what's likely happening in enrollment. And we do update those 3 times a year. So we're looking at total year numbers here, but keeping an eye on those enrollment trends as they come in. Now we're talking about very hard data about what people are actually doing. Any other questions? Well, why don't we wrap up for today? Please do join our master classes coming up, where we will be talking about best practices in how to evaluate academic programs, or as we say, to decide which programs to start, stop, sustain, or grow. And thank you very much for joining us today, and keep on keeping on. There's been a lot of negative press about higher ed. I think you all are vastly underappreciated right now. And what you do is incredibly important to the people and that you educate and to our society as a whole. So we'll do what we can to support you and help you succeed.
Thank you all for joining, and feel free to reach out to any of us with any questions that you have. And thank you, Bob.